Great news for Tesla here. This is great news, okay? So we haven't even ramped Cybertruck yet. It is slowly ramping, but in terms of if you're expecting how much have Cybertruck really helped the numbers, it really hasn't helped the numbers at all. Elon Musk automaker has issued a recall for 11,688 units of the Cybertruck, which first went out for delivery in November 2023, which means, right, when they do one of these recalls, it's not going to be nearly as costly to Tesla. But two, the real ramp's still coming for Cybertruck in terms of the big numbers and in terms of really positively affecting Tesla numbers. So as I've always said with Cybertruck, I'm expecting volume ramp in the second half of the year and then continued into 2025, right? And by the time we get to 2026, like Cybertruck's going to be doing huge numbers quarter after quarter. And by that time, they'll likely have a 60K Cybertruck in the market that's going to be doing very, very well. But that might not even be the best news. This might be better news here. Tesla insurance registrations in China totaled 17,400 for the week of June 17, 2017 through the 23rd, marking a 49% increase from the 11,700 the previous week, according to data by this EV Post. Vehicle registrations in China tend to be slower at the beginning of each month before picking up toward the end of each month, according to local reports. With just 1 week left in the second quarter, Tesla China insurance registrations are up around 14% compared to the seasonally slow first quarter, but down about 7% from the same time period, 2023. So the good news is it seems, and we can't get too excited, but the good news is it seems like the China business for Tesla is starting to pick up a little bit. Okay, which is what we want to see. We want to see the China numbers bottom, and then we want to see these numbers start to get better and better and better. And so the fact that we're up 49% versus a previous week, I would say, welcomed news. Very, very welcomed news. We need Tesla's China business to bottom out and pick up. And so, this is the early signs, I would call this the early signs of Tesla's business in China getting much better. And so I'm definitely very, very happy about that. Now, if you know me, continuously I've said I think the Tesla story gets better in the second half and then into 2025. I've been saying that for 6 to 9 months. The first half of the year sucks. A lot of, I knew this was going to happen. A lot of bad news, bad margins, bad delivery numbers, and just bad stuff across the board, just everywhere you turn. But the story gets better and better in the second half, in my opinion. We'll see margins start to improve in the back half of the year. I think we'll start to see deliveries improve in the back half of the year, production start to improve in the back half of the year, and then things will take another leg up in 2025 in terms of things getting better. So Tesla, you got to go through the tough times. And the good news is the tough times for Tesla, in my opinion, are about over. And so that's the first time I could say that in years. I expected Tesla to have a rough go, and they had a rough go, but things are getting better, okay? Hey, I want to thank you for watching this video here today on the Clips channel. I want to introduce you to 1000xstocks.com. This is the most valuable service you're going to find out there. If you're an investor in the market, this is a tool that's going to help you immensely get to the next level in the market. So when you're looking at 1000xstocks.com, you're able to understand all the different metrics laid out exactly how you need them as a long-term investor in the market. So let's say I wanted to look at a stock like Palantir. I can go ahead and type in Palantir right here, and it's going to say all Palantir's different metrics right here. Let's say I want to go ahead and look at a stock like Tesla. I can go ahead and type in Tesla right here, search, it's going to give me all Tesla's metrics right there. Let's say I want to look at a stock like PayPal. Go ahead, search it up, and then it's going to give me all PayPal's numbers laid out right there. Compare feature is one of the most valuable features of any service literally in the world. And the reason being is you're able to compare 3 different stocks all next to each other in a matter of seconds. It's absolutely, there's no service you're going to be able to find something like this. So let's say I wanted to find out, what do I think is a better buy? Do I think it's Meta? Do I think it's Google? Or do I think it's, let's say, a stock like Microsoft, for instance, right? So I can go ahead, type all those in there, and then hit compare, and boom, in a matter of, what was that, a second or two, it gave me all the metrics out. So now I can say, okay, Meta's forward P is trading at this, Google's forward P is trading at this, Microsoft's trading at this, and I can go ahead and understand this on a very high level. Additionally, we have earnings calls on here as well. So if I need to listen to any companies I own or am researching their conference calls, I can do it right here through the service. So let's say Tesla, if I want to pull up Tesla's latest conference call, boom, I can play it. I can adjust the speed as well. So if I want to listen listen to it at 2x speed. I can listen to it at 2x speed, 1.5x. I also have the transcripts of the conference calls as well right here. We're also working on a lot of different new features behind the scenes. So if you would like to apply for access of 1000xstocks.com, go to 1000xstocks.com and you'll be able to fill out an application and go from there. Alrighty guys, so first off with the Rivian situation. Volkswagen plans to invest up to $5 billion in the electric vehicle startup, Rivian, which Rivian's been around so long now, can we really still call it a startup? Like, come on, man. Like, that's got a, like, you know, kind of like life. You aren't always called a baby or an infant or a toddler. You like move on. Like, come on. Like, Rivian's got to stand on its own 2 feet at some point, right? Starting with an initial investment of $1 billion. The additional $4 billion is expected to be invested following the establishment of a joint venture, JV, according to the joint releases by the automakers Tuesday. Shares of Rivian soared more than 30% after hours trading on Tuesday, 2 days ahead of an investor event for Rivian. Now, what's my view on this for Rivian and for Volkswagen specifically, okay? And by the way, I'm actually kind of an indirect investor of Rivian because I own Amazon. Amazon owns a ton of Rivian, okay? So my view on this is the following. This is a win-win situation for both of these companies. I do not look at this and say Volkswagen's getting the best of this deal. I don't look at this and say Rivian's getting the best of this deal. Each of these companies actually needs each other really bad, and I don't think either one is really benefiting more than the other, and I think this is very vital for both companies. Let me explain why. If you look at Volkswagen and you look at their market share of EVs, global battery electric vehicles, right? 4.6% last year. Now, that might seem like, oh, that's actually pretty decent. Like, they're hanging up there pretty good. Like, if you compare them to GM and Ford and companies like that, it looks like they're doing terrific. But that's not actually good. It's really, really bad for Volkswagen, and here's why. Volkswagen is one of the 2 big giants in the auto industry, and you can say there's a lot of big companies, but at the end of the day, when you talk about the biggest of the bigs, you're talking about Toyota, and you're talking about VW, okay? These are the giants. And so when it comes to Volkswagen, this company has to get EV sales in a way better place than they're at right now. What they're doing is simply not good enough. And the management team at VW, they understand this. And that's why they're making a JV in this situation, because they understand if they're only going to capture 4.6% of the battery electric vehicle market long term, they're going to be in deep water. They need to become a giant in this industry, right? And think about it. Like, if you have the viewpoint I have, which is, over the next decade, essentially, all vehicle sales will eventually go to EVs, right? Well, guess what? This 8.8 million is going to shrink to 8.6 and 8.2 and 7.5 and 6.3 and 4 and 3, and it's going to shrink over the coming years, internal combustion engine sales, right? So they've got to get EV sales going. Now, for Rivian, they need VW as well. If you look at Rivian's financials, it's a dumpster fire. 2019, they lost almost $500 million. In 2020, they eclipsed the $1 billion plus loss on the bottom line. 2021, $4.6 billion loss. 2022, $6.7 billion loss. And this past year, they lost over $1 billion every 3 months. So, technically, you could run the math on this. They lost over $400 million a month on the bottom line. Like, that seems like a hard challenge. Over $400 million per month you lose? That's crazy. This company was losing. Are you kidding me? They were losing over $100 million a week. This is the math on that. They were losing over $100 million a week. How is that even possible? That's ridiculous, right? And they've done that, for the last 2 years. They've lost over $100 million a week. What? It's insane. Like, that just hit me right now. Like, oh my gosh, like that's a crazy number. So, clear as day, Rivian needs financial help. And here's the next problem for Rivian, and this is a pretty big problem, is as of right now, at least, they do not have a mass market vehicle. I like actually both Rivian's vehicles. If Tesla didn't exist, I would probably drive Rivians. Like, I like those vehicles. But with that being said, those are not mass market vehicles. Rivian if they want to become a major player in the auto market over this next 3 to 5 years, they've got to have several mass market vehicles. They got to have their Model 3. They got to have their Model Y. Like something that sells huge volume if this company's ever going to become a profitable company, stand on its own 2 feet. VW understands almost, probably as well as anybody on how to make vehicles very profitably, right? They might not understand when it comes to EVs, and that's where this kind of leveraging with Rivian and Rivian's technology can help. But the two together, they need each other. VW needs the electric technology and get to much higher levels, and Rivian needs to learn how to make some flip and flapjack and money because they're clueless when it comes to that, right? So both of these companies really need each other heavily. That's why I call it a win-win. Now, in the short term, Rivian stock could easily go to $20 to $30. And now, am I going to go play Rivian stock from a short-term perspective, knowing that it's probably going to 20 to 30 in the short term? No, I have no interest in that. But I understand for a lot of short-term speculators, they'll be playing the stock and they'll probably make pretty good money. For the next little short bit of time here. And then obviously over the long term, if we're talking, years out and a year out and many years out, right, that Rivian's success will really be predicated upon if they can get to their Model 3 day, their Model Y day, and really get those to scale in a massive way and start selling, hundreds of thousands of vehicles, millions of vehicles. That's what they got to get to, right? So we'll see, but at the end of the day, good move by both these companies. Very, very intelligent. Housing markets remain stuck until at least 2026, Bank of America says, okay? So if you haven't been tracking the housing market, mortgage applications are near pretty much all-time lows. I mean, it's a disaster out there in terms of mortgage applications, right? And this doesn't come as a surprise. I mean, really the last 2 years have been brutal for the housing market, but specifically things have far worsened really over the past 12 to 18 months. If we really want to get, down the nitty-gritty here. Mortgage applications, I mean, you just got to think like who's really buying out there. It's very few and far between in terms of people the only people that are buying are the people that absolutely feel like they have no choice but to buy. And that's really about it in this market, right? Now, meanwhile, you hear news about this coming out here today. U.S. home prices smashed another record high in April. I understand it's, the end of June and we're finally getting April numbers, but these numbers always lag. But you got mortgage applications near all-time lows. You have home prices at all-time highs, and it creates a very problematic market, okay? Now, here's the deal. Here's what needs to happen to unstick this housing market and get things moving, okay? If you look at the 30-year, if we look at the past 15 years, which that's all that really matters, where mortgage rates were 40 years ago is irrelevant because no one still has a mortgage from 40 years ago. Okay, what matters over the past 15 years is what matters because people have been programmed the last 15 years on where mortgage rates should actually be. And if you've been programmed the last 15 years, where should mortgage rates be? 3 to 5%. The problem is mortgage rates have been significantly above that over the last couple of years, and they remain significantly above that range. So in order to get the housing market back moving again, we have to get mortgage rates back to under 5%, okay? If you're really going to talk about getting the housing market moving. If you got mortgage rates at 7%, you're just in a stagnant market unless we just remain at 7% for the next 15 years, right? Or let's just call it the next 13 years. Then everybody becomes like programmed that it's like, okay, just 7% is what you pay, which would just cause the housing market to freeze for many, many more years until it became so ingrained into people's thinking process of like, oh, we're paying 7% now. Like that's just the way it is, right? Now, here's my thought on when mortgage rates are going to go down, okay? So, and when I say down, I'm talking in a significant way. The Fed's likely, and it's not for sure, but they're likely going to start lowering rates at some point, I would say sometime between September and November. I think there's a pretty decent probability we get a 25 basis point cut, but it's certainly not a guarantee. If we keep having CPI come in the threes, we're not getting there. We need consecutive months in the twos for the Fed to feel comfortable to cut, in my personal opinion. So let's say we get that 25 basis points sometime between September and November. Okay. Well, then we've started. That will be the point where we've officially started the let's call it the rate cut cycle by the Fed. Right now, the important thing to understand about when the Fed is lowering rates or raising rates, it doesn't necessarily make mortgage rates go up or down directly, but indirectly it does. So if the Fed all of a sudden drop rates to zero tomorrow, and basically over the next several months, mortgage rates would plummet down to like the threes, essentially. Okay, and so it just there's an indirect correlation between where the Fed has interest rates and where all rates are at. Mortgage rates, car loan rates, credit card rates. It affects all those. Okay, so here's the deal: we're probably going to be at about, we can call it about 5% on a Fed funds rate in January 2025, right? Then let's say the Fed cuts quarter after quarter after quarter throughout 2025. So then we're probably at a 4, somewhere around 4% Fed funds rate at the end of 2025. And then, so that would put us likely in the threes in 2026, right? And if we're in the threes for Fed funds rate, then mortgage rates would be, I would say they would probably be right around 5% at that particular time. You could get a mortgage for 5% or so. And that would be a moment in which I think the housing market would definitely come back alive there, which once again, kind of goes with what Bank of America is saying here, where they're talking about, the housing market's going to be frozen until 2026. It's definitely a possibility. No, the one thing that could mess up all of this, though, I will say, is a big recession. If a big recession happens, we get a big unemployment cycle. Throw all that out. The Fed will lower rates down to 1% or 0, like quick. But assuming there's no big recession and the economy just continues to go along, maybe it's not a booming economy, but it's also not a crashing economy, then this will probably be something we look like. And so, yeah, I'm actually in agreement with Bank of America. I think, housing market is probably in a frozen state until 2026, outside of something huge happening in the economy really bad, right?